Hi guys, welcome back to Tuesday, April 28th, 2020 daily stocks review. I just posted my daily review and this is the Apple financial statements analysis. So let's get going. We'll be looking at different elements of Apple products, locations, income statement, balance sheet, and cash flow, and then the current performance of the company and why the stock is going up. There have been substantial stock buybacks, and what are the risks and challenges going forward for Apple, and then some of the social responsibility issues Apple is facing. So, Apple's major product, as everyone knows, iPhone, and they also have some other products like Mac, iPad, and iWatch. Looking at the financial statements, income statement, balance sheet, and cash flow. So income statement, as you can see, the revenue has grown up. In fact, revenue has not gone up. In fact, it is has gone down to 260 billion in 2019 compared to 265 billion last year. And in fact, last 5 years, revenue has not grown much from 233 billion in 2015 to 260 billion in 2019. So just increase of 27 billion for a period of 5 years. Similarly, net income has also not gone up. In fact, has gone down compared to last year from 59 billion to 55 billion, and over a period of 5 years, almost stagnant. But the earning per share is almost same as last year and has gone up from 9.28 in 2015 to almost $12 in 2019. And partly because of the reason is this. If you look at number of shares outstanding, they have gone down from 5.7 billion in 2015 steadily every year 5.4, 5.2, 4.9, and 4.6. And this is because management is aggressively buying back Apple stock on the stock exchange. So that is reducing number of outstanding shares. And even though the net income is going down, the earning per share, which is nothing but net income divided by number of shares in the denominator, uh, gives you a better steady picture. But in reality, the net income and the sales both are going down, the top line and the bottom line. And looking at the balance sheet, of course, a lot of cash there, 205 billion, but again, from the high of 269 billion in 2017, steadily going down. And why the cash is going down? Because they have been using that cash to buy back the stock. So that is one of the areas of concern for Apple because the cash is not being used for any capex like capital expenditure or R&D. Rather, it is being used on stock buybacks, which is not very productive, especially when the revenue is not growing. They should be spending more on R&D to come up with better, innovative new products. But that's not looking like the priority. Looking at the liquidity of Apple, of course, as I just mentioned, a lot of cash, 205 billion. A lot of software companies like Apple, Microsoft, Google, they have a lot of cash sitting on their balance sheet just to help them acquire some of their competitors and new entrants, which will help them in future growth. But at the same time, when the cash is going up, the long-term debt has also gone up. So out of 200 billion of cash on the asset side, they also have 100 billion of liabilities, the long-term borrowings. And this is because partly because of the after 2008 financial crisis, the interest rates went to zero. So Apple took advantage of the zero interest rates and low interest rates. And even though it's 100 billion, it's not hurting them much because they don't have to pay that much interest on this 100 billion. But little bit of a concern because against 200 billion of cash, 100 billion is their long-term debt. Of course, on the cash flow side, the biggest critical thing, operating cash, 69 billion compared to last year, 77 billion. So slightly has come down, but still they generated 69 billion. And look at the financing cash flow, negative 91 billion. Last year, negative 88 billion. This is primarily because of the stock buybacks they have been spending money on. So that explains why the cash is financing cash flow is showing negative. Here is the Apple's product-wise analysis. The biggest product, as you can see, all last 3 years, iPhone, which is the biggest contributor to their revenue, out of 260 billion, almost 75% revenue is coming from iPhone. Similarly, the segregation of regions, the biggest region is Americas, contributing almost, I would say, 45% of revenue out of 260 billion. And then you have Europe and China. So China is a major country contributing to the revenue. Remember, out of those FANG companies, Facebook, Apple, Amazon, Netflix, and Google, only Apple is operating in China. All other companies have not been permitted to operate in China. And the gross margins very heavy, 38%, steady over a period of 3 years. But the major, as you can see, the major margin is coming from services and not the products. The product margin is steadily going down. So highlights of the financial statement, as I just mentioned, top line and bottom line both are stagnant, not showing any growth. Still, EPS, earning per share, has gone up because of stock buybacks. Balance sheet, huge cash of 200 billion on the asset side, but at the same time they have liabilities of 100 billion, external borrowings, and there are only very few companies, only 61 companies in S&P 500 who has a market cap of 90 billion or more. So that is one of the plus for Apple, is one of the big market cap companies. Total assets have grown up to 338 billion, out of which 90 billion is the equity and 248 billion, the remaining balance, is their external liabilities and the borrowings, out of which I mentioned almost 100 billion is the external borrowings. And then the cash flow, we saw operating cash is positive. So this is one of the key area, and a lot of companies have been, Fortune 500 companies have been doing over a period of last 3 years, where the stock market is going up, partly because the company management is buying back the stock. In case of Apple, they have bought Apple stock at $205 to $217 per share, and right now you can see the stock price is around 280, and it came down, it went down to 170 in June last year. And they have a very aggressive stock buyback program of 178 billion, out of which already they have used 100 billion, and another 78 billion is lined up for next couple of years. So definitely expect more buybacks. So these are some of the big challenges for Apple. Sales and margin and net incomes are stagnated. Earning per share is still going up because of stock buybacks. Apple is totally dependent on China for the production, as well as their biggest second or third customer. And one of the problem is the Apple CEO Tim Cook has not shown any ethical values. He has been dancing to Chinese tunes, and he will do whatever it takes to make China happy. And the one example we'll see a little later on. But here's the Apple stock price has gone up from 100 to 237 in a period of 5 years, compared to S&P 500, which has gone up by from 100 to 167. And here's the Apple's 52-week high, which is 327, and a low of 170. Right now it's 280, and some of the ratios are really attractive. Revenue 268 billion, return on equity 55%, and net margin of 22%, as well as gross margin of 40%, and debt to equity also very attractive. So, but in terms of social responsibility, Apple, I would rate them very poor because of their operations factory in Foxconn, China, and the Chinese workers are not treated well. They're hardly paid $2 an hour compared to, on an average, $60 per hour here in USA. Plus, US worker gets benefit, but Chinese workers are not getting any benefits. And then, just like Amazon, I would say Apple and its CEO hasn't shown any concern for their workers in China. And a recent example, as I said, there was a Hong Kong protest where Apple pulled down the tracking app after getting criticism from China. So they don't want to take any risk in terms of China, because, as I mentioned, China is almost 43 billion of sales out of 260 billion. So that's a very substantial chunk of revenue. So they would not like to disrupt that. Plus the factory in China. So the supply chain is totally located in China. And another news is always Apple has problems with their suppliers. Qualcomm just recently settled the SUE lawsuit with Apple over their patent royalties. So at the end, should we buy the stock or not? Apple stock, is it worth buying? I would say it's 50-50, and definitely I would not recommend in short term because as I mentioned, Apple had gone up to 327 and right now 280. And with the problems we just analyzed, the revenue and the net income is not growing. They have huge stock buyback program which is helping them sustain their earning per share. Balance sheet is strong with 200 billion cash, but with also comes 900 billion of external borrowings, but they're not paying any interest on that. Goldman Sachs, one of the Wall Street analysts, recently, a couple of weeks back, they downgraded Apple stock in view of their Chinese dependency and coronavirus environment. Earnings, of course, are coming up in a couple of days. CEO Tim Cook has always been reaching out to Donald Trump and China to make Chinese supply line and their market share. Number of lawsuits Apple has, including one I mentioned with Qualcomm. Apple's dividend payout is not very attractive. Dividend yield is only 1%. Market cap, of course, in excess of 1 trillion. Very few companies who have a market cap of 1 trillion or more. In terms of social responsibility, I would not rate them very high. So in the short term, I would rather in next couple of days on earnings, I expect Apple stock to go down by at least $20-30 to go around $250. And but yes, of course, they don't have any competition. So over a period of 4 to 5 years, next 4 to 5 years, definitely stock can increase by $100 maybe. So that's it from me in terms of Apple analysis. Tomorrow again I will see you with daily market review, as well as I will analyze one of the New York Stock Exchange listed company. Take care. Bye.